In the last video, we discussed CHOCH and BOS, from bullish to bearish. In this video, we will do three things. First, a quick recap of what we already learned. Second, we will understand CHOCH and BOS from bearish to bullish. And third, our main focus. We will go through different complex chart examples, step by step, in more detail. Stay with me. Let's begin. First, a very quick review. Here you see the last confirmed higher low in the bullish wave. Then the market made this high and started reversing. Once this last higher low from the bullish wave is broken with a candle body close, CHOCH happened. After that, when the market broke the last confirmed low, BOS was confirmed. Simple, clean, logical. Now price moved further in its bearish direction, reached this area, made this last low, and, from here, it started reversing towards the bullish side. Now this part is very important, so pay attention. When structure is shifting from bearish to bullish, we do not look for higher lows anymore. Here, we must focus on the last confirmed lower high. Remember this clearly. For bullish shift, the key structure point is the last lower high. So, in this case, follow these steps. Step 1. Identify the bearish wave clearly. Price is making lower lows and lower highs. That tells you the market is bearish. Step 2. Identify the last confirmed lower high in that bearish wave. Mark it with a clean horizontal line. This is your reference point. Step 3. Once the market breaks that lower high with the bullish candle body close, mark it as momentum shift or CHOCH. As explained earlier, momentum shift or CHOCH is just an early signal. It tells you something is changing, but it does not confirm full structure change. Step 4. After momentum shift. Now shift your focus to this new bullish leg. This is where we wait for retracement, confirmation, and finally BOS, which we will explain using complex chart examples next. Remember, MS or CHOCH gives you awareness. BOS gives you confirmation. In the next examples, you will see how all of this works together on real charts. Example 1. Here you see the market is in a bullish direction. Now look carefully at this retracement. At first glance, it looks like a pullback, but this retracement is not valid. Why? Because everything happened inside this single green candle. There is no candle body close below, only wicks. This is just a liquidity sweep, not a structure break. So we ignore this as a structure point. Now, let's move forward. After making this high, the market made a valid retracement up to this area. So, this point will be marked as a high or higher high. From here, price moved down and formed this higher low. But remember, this higher low will not be confirmed until and unless market breaks the previously created high with a candle body close. After this breakout happens. Now this higher low is confirmed. Let's draw a horizontal line here, one at this higher high and one at this higher low. Now, observe something important. The price movement between these two lines. This entire movement is called internal structure. When we compare this internal movement with the major wave, this becomes internal structure inside an external structure. Remember this rule. When the gap between major structure points is large, it is very normal to see multiple valid structure points inside. But those points are internal, not external. We will study internal structure later. Next comes example 2. First, let's mark the structure. It's in this first bullish wave. And don't forget the valid retracement rule we discussed earlier. So this point here is the beginning, and this is our low. Now look closely at this area. You see this strong green candle. And after that, you see two red candles. The first red candle only swept the liquidity of this green candle from the top, and it closed inside the green candle body. If we look at the second red candle, yes, technically, the candle body is closed a little bit below the green candle body. And yes, according to rules, that can be considered a valid retracement. But here come the important catch. If you look closely, not even 30% of the candle body is closed below the green candle. Most of this candle is just rejection wick. The wick is much bigger than the body close. Personally, I do not consider this as a structure point. Why? Because structure needs clarity, and we definitely don't want structure based on a microscopic body close. For structure, we want a clear, strong, and meaningful body close, no confusion. In this entire wave, this one is the latest confirmed higher low. Now look here. This time, you can clearly see a valid retracement, and market closed below this last higher low. This is very important to note. Once the market closes below that higher low, with a candle body close, that is our signal for momentum shift or chach. After the momentum shift, now our focus shifts to this bearish leg. The question is, do we see any valid retracement here, and more importantly, did BOS happen? The answer is no. There is no BOS in this case. Why? Because after momentum shift, the market did not create a confirmed structure point in the bearish leg, and it did not break that point. Instead, look what happened. The market continued in its main bullish direction. Price moved up and broke the last higher high. This is a perfect example of why momentum shift alone is not enough. MS is on an early warning. Without BOS, the trend can continue in the original direction. Please note this carefully. All what we have discussed so far is external structure. We have not yet touched internal structure. Internal structure is also very important, because it helps us catch early entries with better risk and precision. We will cover internal structure step by step, but first, it is very important to fully understand external structure. We really work hard to make this content simple and valuable for you, so please like the video and subscribe to our channel. It truly helps us and keeps us motivated to create more lessons like this. Thanks for watching, and see you in the next video.